Hey everyone, and welcome back to Wealthy Brains. Today we're going to be talking about Peter Schiff and his views on the economy. Peter Schiff is Chairman of SchiffGold, CEO, and Chief Global Strategist of Euro Pacific Capital, Inc., and the host of The Peter Schiff Show. Peter is an economic forecaster and investment advisor influenced by the free market Austrian School of Economics. In an August 2006 interview, Schiff said, "The United States is like the Titanic, and I'm here with a lifeboat trying to get people to leave the ship. I see a real financial crisis coming for the United States." On December 31st, 2006, in a telecast debate on Fox News, Schiff forecast that what's going to happen in 2007 is that real estate prices, which had peaked in December 2005, are going to come crashing back down to earth. In his 2007 book, Crash Proof, Schiff wrote that U.S. economic policies were fundamentally unsound. Since then, he has stated many times that without a change in U.S. government economic policy, there will be hyperinflation and that the imbalance between the number of goods the U.S. consumed and what it produced would eventually lead to problems for the U.S. economy. As a remedy, he favored increased personal savings and production to stimulate economic growth. Schiff cited the U.S.'s low personal savings rate as one of the causes of its transformation from the world's largest creditor nation in the 1970s to the largest debtor nation in 2000. In 2008 and 2010 appearances on Fox News and financial news network CNBC, Schiff mentioned factors such as speculation and the absence of lending standards as factors that had contributed to the housing crisis, which began in 2007. On December 13th, 2007, in an interview on the Bloomberg TV show Open Exchange, Schiff added that he felt that the crisis would extend to the credit card lending industry, and he called consumer credit a cancer on the free market economy. Schiff said that interest rates would rise, and that all classes of dollar denominated assets would fall in value relative to non US assets. He predicted a huge crisis and the blow up of credit card finance in 2008, with the result that consumer credit card spending limits would be slashed by card users. With the result that consumer credit card spending limits would be slashed by card issuers. He added that Americans would no longer be able to make purchases using their credit card lines. This prediction went unrealized. Referring to the housing market, Schiff went on to criticize the policy of Bush administration to vilify and threaten the leaders. Referring to the housing market, Schiff went on to criticize the policy of the Bush administration to vilify and threaten the lenders for reckless borrowing. In a March 2009 speech, Schiff said that it would be impossible for the U.S. public debt to China to be repaid unless the U.S. dollar's value is substantially diluted through inflation. In September 2009, with gold below 1,000 per ounce, Schiff said that he foresaw gold at over 5,000 per ounce in the future, and that the stock market rally which began that year was a rally in a bear market. Taxation. In March 2011, Schiff stated that a national sales tax should replace both personal and corporate income taxes, as he believes that the latter discourages work as opposed to a consumption tax. Schiff's second choice is a flat tax rate, which would abolish all deductions, including the very popular home mortgage tax deduction, as Schiff believes that the state should not subsidize buying homes as opposed to renting. Medicare. In August 2012, Schiff criticized Paul Ryan's path to prosperity by saying that it is too little too late. Referring to Ryan's plan to reform Medicare, Schiff said, "Why would we want to preserve it? It's a Ponzi scheme. What we really need is real Medicare cuts today for people who are already on the system." Bitcoin. Peter Schiff is a vocal Bitcoin bear. At times, he has remarked that he sees Bitcoin as resembling the tulip mania bubble. Responses. Schiff's warnings of a coming economic collapse earned him the moniker Dr. Doom, but later articles in Business Week and other businesses news journals reported that Schiff, more or less accurately, predicted the financial crisis of 2007 to 2010. While the easiest criticism of macroeconomists is that nearly all failed to foresee the recession despite plenty of warning signs. A YouTube fan video, Peter Schiff Was Right, became popular in the late 2008 and 2009. It contained a compilation of his appearances on various financial TV news programs between 2005 and 2007. Depending on the point at which they adopted his strategies, followers of Schiff may have had strong average or poor returns. In January of 2009, Economic blogger and investment advisor Michael Shedlock wrote, I have talked with many who claim they have invested with Schiff and are down anywhere from 40% to 70% in 2008. Later that week, an article appeared in the Wall Street Journal reporting that Schiff's broker dealer firm had advised its clients to bet that the dollar would weaken significantly and that foreign stocks would outpace their US peers. But the dollar later advanced against most currencies, magnifying the losses from foreign stocks in response to Shedlock's criticism. Schiff wrote that to examine the effectiveness of my investment strategy immediately following a major correction by looking only at those accounts who adopted the strategy at the previous peak is unfair and distortive. In December 2012, Schiff wrote an article entitled Miss Shedlock Exposed, in which he criticized Shedlock for selective use of short term data in the financial crisis and argued that his investment strategy had made strong returns over the long run. Schiff's views have been criticized several times by economist Paul Krugman, who defines inflation very differently from Schiff, focusing on CPI increases rather than monetary and asset price inflation, which Schiff believes eventually lead to increases in consumer prices after an indefinite waiting period. In October 2010, Krugman wrote, I keep being told that Peter Schiff has been right about everything, so how's that hyperinflation thing going? In December 2011, Krugman quoted Peter Schiff's statement from December 2009. I know inflation is going to get worse in 2010, whether it's going to run out of control or it's going to take until 2011 or 2012, but I know we're going to have a major currency crisis coming soon. It's going to dwarf the financial crisis and it's going to send consumer prices absolutely ballistic, as well as interest rates and unemployment. Krugman noted that inflation had instead remained low and concluded that Schiff's type of economic model is all wrong, since it predicts that a tripling of the monetary base, such as had just occurred, must lead to dire effects on the price level. In January of 2012, Schiff stated that a U.S. debt crisis and high consumer price inflation had been delayed merely by government policy. In November 2012 and again in November 2014, Krugman repeated his criticisms of Schiff's predictions of eventual high consumer price inflation and rising interest rates in America. In November 2008, Schiff said that he supported the reduction of government economic regulation and was concerned that the Obama administration might instead increase such regulation. Schiff said that the late 2000s financial crisis provided an opportunity to transition from borrowing and spending to saving and producing. He was critical of the U.S. government's efforts to ease the pain with economic stimulus packages and bailout, as he believes that replacing legitimate savings with a printing press would result in asset price inflation, eventual consumer price inflation, and if left unchecked, potentially hyperinflation. For example, in 2009, Schiff predicted a protracted period of economic decline accompanied by rapid increases in consumer prices. Schiff's critics pointed out that although asset price inflation has been significant, consumer price inflation rates remained very low in the 5 years that followed despite his predictions. When the Fed ended the quantitative easing program in October of 2014, the general opinion was the Fed would conduct multiple rate hikes in the year 2015. In contrast, Schiff predicted that the market could not withstand even a minor interest rate increase, thus, the Fed announcing a higher rate would be very unlikely. However, he did open up the possibility of a few basis points rate hike, but anticipated that it would have a major impact on the equity market and would lead the US into recession. Therefore, the Fed would be forced to reverse its policy and resume the QE program. This is it for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.